One of the common strategies of a 1031 exchange is to transfer wealth to your heirs. By using 1031 exchanges to buy and sell property, you get the ability when you pass to pass along what's called a step up in value to your heirs. In other words, it doesn't matter what your gain is on that day. The government looks at it as your heirs got it at that value. So if it was worth $10 million and you originally only invested $1 million, you, if you sold it, would be subjected to taxes on a $9 million gain. But your heirs get to inherit that property at a $10 million value. If they sell it for $10 million, there's no gain, and they get to get that wealth transferred to them tax-free. So in a traditional 1031 exchange, people buy a property, they have a gain, they sell it, and if they took the cash back, they'd have to pay capital gains tax that year. So by using a 1031 exchange, that capital that comes back from your sale gets reinvested, and you defer those capital gains taxes until your final sale. Now, many of us have sold businesses or other assets and are not eligible for the traditional 1031 exchange because it's got to be a property, a like-kind property to a like-kind property. And those rules are specific, and we can get into that the next time we chat. But someone selling a business or another asset that doesn't want to pay capital gains tax is able to use what's called a qualified opportunity zone fund and take that gain, invest in the fund, and avoid and defer paying the capital gains tax that year. Matter of fact, the fund has a 27-year life cycle right now where you would invest your proceeds. In 2027, you'd pay tax on the gain, but any gain from the day you invested until 2047 would be tax-free.